Hi, this is Bill Polis from Profits Run, and in this training, you're going to learn how you can potentially double or even triple your money every time Apple does this one thing. I'll reveal what it is in a minute, but by the end of this short training, you'll know how to copy my step-by-step trading plan that you can use to indeed have the potential to double or triple your money every time you use it. And by the way, once you start using this strategy, you're not going to want to stop. It's that good. And as you're about to see, this strategy not only works great with Apple, but also with other popular blue chip companies. So if you're not happy with your trading results as of late, if you get depressed every time you sign in and see your account balance, or if you're simply sick and tired of feeling left out while everyone else is taking home their piece of the pie, then today could be life-changing for you. Why? Because by the time you reach the end of this training, you'll have a secret weapon. A little-known strategy that you can use to potentially double or even triple your money each time Apple does this one thing. Plus, you can use this strategy even if you don't have much money to start with. And best of all, thanks to my special trading rules, even when you lose, you'll only lose a very small percentage of your money. But when you win, well, you'll see. So make sure to watch this short training now, as I can't guarantee it'll be available in the future. So who the heck am I? And why should you listen to me? In case you're not familiar with me, my name is Bill Polis, and I've been trading the markets since 1974. Some people love to race cars, others love to do crosswords, but my passion is trading the markets and finding safe and reliable ways to win more trades. For years, I worked in the auto industry and traded the markets at night. But in 2001, I decided to share my innovative trading strategies with the world. And so I founded Profits Run Incorporated with my son, Greg. To date, we've helped over 50,000 regular people around the world become better and safer traders. I come from a very modest upbringing, and my Greek parents always taught me to tell the truth. So let me be completely upfront and honest with you now. I'm going to show you an unusual trading strategy you can use to go after triple-digit gains trading Apple and other blue chip stocks. But I'm not going to pull any punches. This method will not work 10 times out of 10. You'll have some losing trades, but when you lose, you'll only lose a small amount if you follow my rules. And if you win, well, you could win big. I know it's not all that common to hear somebody talk about losing trades, but I'm not trying to pull the wool over your eyes like those other guys. I am not promising you millions overnight. Instead, I'm offering to show you a simple and repeatable way to potentially double or triple your money in as little as a few weeks. Sound good? But first, let me tell you a little story. Many years ago, I bought a stock based on a hot tip. I was young and I didn't know any better. Maybe you've made a similar mistake. Anyway, to make matters worse, I didn't have any money to invest, so I actually took out a loan from the local credit union to buy shares of this stock. Right after I bought in, the stock tumbled, and eventually the company went bankrupt. I lost my entire investment. But this painful loss taught me a very important lesson. And that lesson was probably best summarized by billionaire investor Warren Buffett, who has 2 rules for creating wealth. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. Now, obviously, I can't promise you'll never lose a trade. After all, the only way to guarantee you don't lose is to put your money in a bank certificate of deposit, which guarantees you don't lose, but also guarantees you'll never make more than 1 or 2% on your money, if that. But I can show you how to go after double or triple digit gains on your money and slash your risk down to the bone so you'll never experience an account crippling loss like I did all those years ago. So here's the secret. It's knowing in advance the exact date a stock's price is most likely to make a move. For years, I'd been noticing that a company's stock price often jumps or falls in the days leading up to or immediately following earnings announcements. You probably already know this, but for my beginner students, publicly traded companies make quarterly earnings announcements where they report their profits or losses. And what's interesting about this is a company's stock price will typically jump or fall based on the public's reaction to these announcements. But the really crazy thing is the stock's price can often fall even if a company announces good earnings. If the public and the analysts were expecting the earnings to be higher than what was announced. On the flip side, a stock's price will often jump even if a company is reporting a loss, so long as the loss was less than the public was expecting. Like I said, it's a little crazy. Earnings announcements are made public, and we know exactly when a company will make their quarterly earnings announcements, which means we know exactly when a stock is most likely to rise or fall. And so this opens up a very valuable profit window where you can potentially double or even triple your money in the few days before and after earnings announcements. And maybe best of all, it doesn't matter if the stock's price goes up or down. By using an unusual two-part trade, you can potentially make money if a stock's price shoots up after earnings announcements. But here's the incredible part. If the exact opposite happens and a stock's price crashes, you could still potentially double or even triple your investment. That's right, it doesn't matter if the stock's price rises or falls, so long as it moves one way or the other. You can win the trade. And in the rare case where a stock doesn't move much during an earnings announcement period, you'll only lose a very tiny percentage of your investment. The average losing trade with this method was just 4.2% during a recent time period. The secret is in this unusual sketch. It's a representation of a special two-part trade called a straddle. That allows you to potentially profit no matter if the stock rises or falls. The straddle captures the profit no matter which way the market turns. But don't take my word for it. Have a look at how this strategy fared over a recent period trading Apple. It had 7 out of 8 winners with this strategy. The average winning trade, 97%. The lone losing trade, you'd have lost just 4.2%. As you can see, this strategy does indeed give you the potential to double or even triple your money while drastically minimizing risk. If you're not happy with the results from your recent trades, or if you're simply looking for a high-reward, low-risk method that can give you the potential to lock down double or triple-digit paydays, then let me show you exactly how to put this two-part trade into place. And to do that, I'm going to show you an excerpt from a recent webinar I did on teaching the straddle strategy. The first thing you're going to want to do is bring up a chart of Apple, AAPL in this case, compliments of freestockcharts.com. This is a daily chart. And what we're looking for as we head towards earnings announcement, which will be January 25th, 2016, is that the market will start to consolidate into a narrow range. Now that hasn't happened yet as it's sold off hard here in the last couple of weeks. But as earnings announcement date approaches, generally the Apple price chart will begin to consolidate in a sideways range. Now if we zoom out and look at the chart here for the last several months, you can see here we've got a high back in late October. We've got the low here in late September. And now the market is trading right at that low, a little lower. And so even though we're not in this sideways pattern yet, we can anticipate that that sideways pattern is going to take place in this area right here. Now, we don't know that for sure, but it's not important to know that for sure. All we need to do is have an idea of where that might take place in order to put a straddle position on right now. And so as earnings announcement approaches, we should expect to see this kind of behavior so that upon earnings announcement, we're going to look for a breakout to the upside or the downside. We don't know which, and it doesn't matter because we're buying both a put and a call. But we want to take advantage of the tendency of the stock to break out post-earnings announcement. Now you have a choice here. You can put this straddle on right now where we're still a month away from earnings announcement, where the implied volatility in the option premium is lower right now than it will be just prior to earnings announcement. On the other hand, the time value baked into the option premium is higher now than it will be just before earnings announcement. So The implied volatility impact on the price of the straddle and the time value impact on the price of the straddle offset each other to some degree. So you have a lot of latitude here time-wise when you put the straddle on. You put it on now, you can wait a week or two or three. It's best to have it on at least a few days before earnings announcement at the latest. And you can monitor the price of the straddle day by day, looking for an anomaly where it might drop temporarily and give you an opportunity to get in at a very good price. Okay, keeping in mind the price right now is at around $107, let's go to the options table to see which straddles we have available. And to do that, I'm going to use Options Express, a very good online discount broker, one of many that are out there today. And here we're looking at what is called the option chains for Apple, AAPL. Option chain meaning the quotes for the various Apple options. So I've already loaded in the symbol AAPL and the type of option strategy, straddles. And I've loaded in the March expiration because we're sitting here in December targeting the January 25th earnings announcement. And we want our expiration month to be at least 1 month past the earnings date. And depending on the option price, 2 months beyond the earnings announcement date. Now let's just take a look. For the March expiration, we have these near the money straddles, the stock trading at 107. Here are the bid-ask prices for those various straddles, with the strike price of 100, 105, 110, and 115. And you can see they're all fairly close together. What I like to do is get as close to the current price as possible. In this case, that would be 105 or 110. Let's go with 105. And you see we would have to pay at the market $12.55 for this straddle. What I like to do is go in and get a little cheaper by splitting the difference between the bid and the ask. In this case, I'd go in and buy it for 12.45 limit order. And most of the time you will get filled if you split the difference between the bid and the ask. But let's take a look at the February expiration and see what the 105 straddle would cost you. $10.90, bid $11.05 ask. See, not that much less than the March. So in this case, I'd prefer being out another month so that theta decay or time value doesn't work against me. So we'll go with the March option, the 105 straddle. And if we click on the plus button here, that opens the straddle up for us. And you can see here's the March 105 call, bid ask 685.7, the 105 put 540, 550. And as a straddle, 1225 to 1250. Now, as I said earlier, we want to pay attention to implied volatility. And to do that, we can click on our straddle, go over here to detail, and that brings up the chart of implied volatility. You can see that's plotted here in blue, implied volatility. That's what we're interested in here. And you can see it's ranged from a low of around 15 to a spike here around 55. And currently it's at about 27. And so remember, we've got implied volatility impacting the price of the straddle along with time value. And what we'd like to have is implied volatility be at a reasonable level at the time we put the straddle on. We wouldn't want to put the straddle on in a peak situation right here because we would be paying far too much for that straddle. And when the implied volatility collapsed, that would put us in a negative position. So here's the guideline. You take the low end of the range for the past year, which in this case looks to be about not 15, maybe 18. and the high end 55, and then take the midpoint of that range, which is about 35, 36, right in here. And as long as the implied volatility is below that midpoint, I would consider that to be reasonable. Now, as you approach earnings announcement, the implied volatility, as I said, is going to start climbing up. And again, though, as long as it stays below that midpoint, 35, 36, it's still a fairly reasonable level. So it's a trade-off between the implied volatility going up as you approach earnings and the time value going down. And you have to look at each situation. And by monitoring the price of the straddle, you can then decide when to put it on, starting about a month before earnings all the way up until a few days before earnings announcement. Now, there's a myth amongst traders that, well, you really can't put this strategy on because as you approach earnings date, the implied volatility goes up, anticipating the big move in the stock, and so you're going to be paying too much for the straddle, and it's just not worthwhile. Well, that's absolutely not true. Yes, it is true the implied volatility is going to go up, and yes, it is true that straddle is going to cost more just prior to earnings as it does back here a couple of months before earnings. But history has demonstrated time and time again with the Apple stock in particular, the subsequent move in the stock is so dramatic that it more than offsets the impact of implied volatility on the straddle price, allowing that straddle to bag double and triple digit returns time after time after time. So as long as you follow these guidelines, you have a viable trade. Okay, with that background, let's now go back to the option chain table. Now, before we go ahead and put the position on, you want to go and look at the risk curve so you can see the trade-off when you buy a straddle. To do that, we go over here and click on Calc, and that brings up the trade and probability calculator. And here I've got the March 110 call and the March 110 put. Now, I don't want to sell. I want to buy one contract of each. And for illustrative purposes, we'll just go ahead and buy it at the market price. But in reality, you should go in with a limit debit order, splitting the difference between the bid and ask. Okay, then you click Calculate, and that brings up the risk curve. This nice V-shaped curve. Now, on the horizontal axis, we have the price of the stock. On the vertical axis is the profitability of the straddle at different stock prices. So that at expiration, which is what this curve is showing you, at expiration, if the stock doesn't move at all, you have the maximum loss. At expiration, the stock would have to rise above $122 to begin to make money, or below $97 to begin to make money. We're losing money in here, and we're making money here. Now that's at expiration, but we're not going to hold the straddle into expiration. We're going to be out of it long before then. What does the curve look like at the time you put the straddle on? Well, that's this green line here. Because the difference between the green line and the blue line at expiration is driven by time value and implied volatility. So as we approach expiration, you can see the curve will collapse into the blue line. And that's why we want to be out beyond earnings announcement date by at least 1 month, if not 2. That's why we picked the March option, because that green line is not going to fall very quickly until the last month of expiration. And you can see now that the break-even points are much tighter than they would be at expiration. So let's move the curve out to February 1st, a week or so past the earnings announcement date. So here's the green curve at that point. Now ask yourself, post earnings with Apple now trading at 107, is it reasonable that Apple could be trading higher than 120 or lower than 98? You bet it is, because it's happened quarter after quarter after quarter after quarter the past couple of years. Now it gets even better than that, because I'm going to show you in a moment how to partially recover the cost of the straddle by selling the option that's losing value after the stock makes its move post earnings. That will alter the look of this risk curve so that the break-even points are further reduced and the profitability is enhanced. And before leaving this chart, let's just suppose Apple post earnings jumps to $132. Well, you now have a $1,000 profit. Or it drops to $88. You have a $1,000 profit. That would be pretty close to 100%, 85, 90% gain. And of course, it could be even greater. And if you consider that you're not going to hold the straddle till expiration, your maximum risk really is about half of that. In other words, if the stock went nowhere as of the first week of February, your straddle is going to be losing about $500. And at that point, you just bail on the trade and take your loss. So if you compare that level of risk, $500, to the potential to make $1,000, I mean, you're talking about 200% opportunity here. Okay, if you only made 500, you're talking about 100% against the real risk in the trade. That's why these trades can be so lucrative. And so to place that trade, you go back to the option chain page. Here's our straddle, Apple March 105, and you just click on trade. And you can see both the call and the put have been preloaded, the 105 March options. We want to buy to open, not sell to open, buy to open. For illustrative purposes, we'll do one contract each. Depending on your account size, we'll determine how many contracts you can put on following the risk management principles. And price, we have a choice, market, or we can go in, as I said, with the limit debit, splitting the difference between the bid-ask. And you click then preview order. That gives you the opportunity to review your order before you place it, and you always want to do that to make sure you've got the right order. So we're buying to open to initiate the position. When we close the position out, we're going to be selling to close. But right now we're going to initiate the position, buy to open, the Apple March 105 call and the Apple March 105 put at the market in our example. And we click place order, and we're good to go. Okay, back to our chart of Apple. I'm going to show you now how to manage the trade once you put the straddle on. This is very important. Once you put the straddle on, you just sit back and wait for earnings announcement. And what I'm going to do is go back and look at the last earnings announcement, which was September 28th, right in here. And once that earnings announcement date occurs, you begin to look for a breakout. Now you can see nothing happened here initially. Market just chopped sideways. So you don't always get a reaction immediately following the earnings. Oftentimes we do, but that didn't occur in this case until here. Once we get a definitive move up or down from where the stock was trading right at earnings announcement, we can apply our exit strategy. And what we do is take a simple trend line, connect to a minor trend low which would be that one right there. Count 5 candles and draw the line. So there's our line. 1, 2, 3, 4, 5. Now we cannot draw the line over any of the lows. We connect the lows. And then we wait for another minor trend low. And a minor trend low is going to be a low that has at least 2 higher lows on either side. And that would be this low right here. And we can draw another line. We count 5 candles. 1, 2, 3, 4, 5. Anytime we can draw a tighter line, we do so. And then we just simply wait for the market to close below the upward sloping tightest trend line. In this case, that's right here on November 5th. At that point, you would sell to close the straddle. And you can see it's a good thing because now the market dropped back down into the neutral territory, and you wouldn't want to carry that straddle in that case because you'd end up losing money. So there's a simple technique on how to manage the trade. And of course, if the market had broken lower, you would be connecting to a minor trend high and drawing downward sloping trend lines until the market closed back above. Now, one final very important technique in managing the trade is once the stock breaks out, up or down, you want to sell the option that's losing money. In this case, the stock broke higher, and now the call is making money and the put is losing money. Well, obviously, the stock's going higher here. It's not going lower. And as soon as you get this breakout to the upside, you want to sell that put option because it still has significant value. You don't want to hold it all the way up into here because it's going to lose even more value. So sell it here while you can. That reduces the effective cost of the straddle, enhances the profitability. As the market moves higher, the call becomes more and more profitable, which ends up supercharging your percent profit. What you just learned was one way to trade straddles with earnings announcements. And while it can be very effective, you can only use it that way 4 times a year. But there are actually many other situations where an option straddle is the ideal strategy for going after a ton of profit potential. So if the idea of going after triple-digit returns 4 times a year sounds appealing, imagine what it would be like to use this same strategy every week, trading the best out of hundreds of different stocks. There's nothing more frustrating than having to sit on your hands and watch a golden opportunity in the market pass you by just because you didn't know how to take advantage of it. And that's why I developed a training program that teaches you how to find the safest and most lucrative trading opportunities that you can use with straddles nearly every day. I call it Options Profit Mastery, and it gives you absolutely everything you need to become a master at trading straddles. The most difficult part of using straddles outside of earnings announcements is that it's difficult to find the other trading opportunities if you don't know precisely what to look for. And that's why I developed my custom trade candidate software as part of my Options Profit Mastery program. Let me show you how it works. Every night after the markets close, it applies my filters for the straddle strategy to the best stocks and ETFs to see which ones would make good trading candidates. Then it displays the matches on the Trading Candidates tab, which you can see here. The filter name column shows the specific strategy you can use with the stock or ETF that's a good candidate. In this case, it's showing straddles, but also a companion strategy called strangles, which I'll talk about in a minute. The stock and ETF column shows the symbol for the stock or ETF that made the cut, and you can click on the symbol to see an interactive chart. The latest price is also displayed here. Now, the age column and the first appearance column tells you how recent the trading candidate is, depending on the strategy. Some of the candidates may still be good to trade for as long as 30 days, so you don't need to worry if you're busy and miss one here or there. Also, you can choose to have the newest candidates sent to your email or cell phone. so you don't have to keep checking the software for updates. Remember, the goal here is to teach you how to master options trading, so the software is only a tiny part of the overall program. You'll love using it to save time to quickly find the best trading opportunities each night. And in addition to the software, you get digital access to the full straddles training module, which you can see here. This is a full-length, professionally recorded training video. And if you liked what I taught so far about straddles in the training I featured recently, you haven't seen anything yet because, while the information I taught you is very useful, there's a lot more involved with trading straddles where you'll learn even more ways to use them to go after profit potential in ways you've probably never even considered before. As a matter of fact, what you've learned so far in the training I featured recently is just the tip of a much larger pyramid. And while you can do okay using what you've learned so far, you really need to understand the complete picture before trading with real money. So get ready, because you're going to be blown away by how powerful the full training is. Also, in addition to all the video training, you get a full color reference manual. This makes it super easy to reference the diagrams, charts, and training presented in the training video. There's also a companion strategy to straddles called strangles. This essentially doubles the trading opportunities you can find on a daily basis. And if you enroll today, you're going to get the strangle strategy for free. You're also going to get a bonus training video that reveals all the step-by-step rules programmed into the software that'll teach you exactly how to find the best stocks and ETFs to trade with straddles and strangles. Plus, you're going to get a trading rules blueprint that summarizes everything you need to know to trade this method in one spot. This is like the secret sauce or the DNA of this method, and many of my students like to keep it by their trading computer for easy access. You get all of this for free today when you enroll. Now, if you're brand new to options, I have 2 bonus training modules especially for you. The first one's called Basic Options Fundamentals, and I designed it to get you up to speed on the concepts and terminology you'll need to understand. And the second one's called A Deeper Dive, because I reveal critical options trading concepts that are easy to understand but often misunderstood, even by seasoned options traders. And yes, you also get these for free when you enroll. Now, I'm almost done, but there's still a few more important resources you're going to get access to, including access to the Options Profit Mastery members website, which you caught a glimpse of earlier. This is where bonus training materials will appear, as well as any updates to the program. This is the same website the full Options Profit Mastery students have access to. The only difference is that you'll just be able to access the straddles and strangles material. Plus, when you enroll today and become my student, I'm going to give you a full year of unlimited premium email and live chat support. This isn't some throwaway outsourced support either. I have a full-time support team of professional traders working with me in my office in Michigan that are here to answer your questions and help you succeed. If you have a question with a particular trade, let us know and we'll take a look. Every question is important to us, no matter how simple or complicated you think it is. So here's what you get today. You get a full year's unlimited access to the Options Profit Mastery Trade Candidate software for straddles and strangles, which is a $1,500 value. The straddles and strangles training modules and trading blueprint, which is a $2,500 value. And the basic options fundamental training modules for $500. And a year of unlimited email support for $1,000. Now that's a total value of $5,500 so far. But I have an extra bonus I think you're going to love. And it has to do with something that I need to caution you about, something that's pretty important. Everything you've learned so far is great, as long as the markets continue to move in a somewhat deliberate fashion. However, there's one market condition that, if it comes to pass, could render all of this training useless, unless you know how to modify it for this special condition. And that condition is the next market crash. If you've lived through the dot-com crash or the most recent October 2008 crash, then you know what I'm talking about. These life-changing crashes wiped out more than 50% of most people's investing and trading accounts. And if you don't think the market can crash like that again, you're wrong. It's a near certainty that we'll experience many more account-crippling market crashes in our lifetime. And many experts think the next one could hit at any time. Now, it could be next month or in the next year or two. No one knows exactly when, but it is coming. Unfortunately, most people will probably watch their accounts get hit yet again during the next crash. But it doesn't have to be that way if you know what to look for. Let me explain. You see, after 4 decades in the markets, I discovered 3 strange warning signs that appear before a major crash is about to happen. In fact, all 3 telltale signs have preceded every major market crash since 1929. And if you see all 3, that's a clear indication to get out now. In other words, you want to get out of your business as usual trading strategies and start using a specialized protect and profit strategy. Most people think you should just ride out the crash and hope for better days ahead. A painful strategy, to say the least. But my protect and profit strategy gives you ways to actually go after a ton of profit potential before, during, and after the crash. And if you're thinking, well, maybe I should just wait for the crash before attempting any trading, well, I have some bad news for you. If you wait for the crash, you're going to miss out on one of the biggest money-making events to ever hit the market. That's because every time a market crash occurs, there are quiet groups of smart traders who make an absolute killing because they know what to look for. So the smart move is to learn as many trading strategies as you can right now, especially while the market's still in a business-as-usual mode. Because no one knows the exact date of the next crash, it's best to keep trading and going after as much profit potential as possible and growing your account right now. Then when the crash hits, you'll be much more prepared than most traders. So while they're all scrambling and wondering what to do, you'll be calmly executing your protect and profit strategy to go after even more profit potential. My original plan was to turn this strategy into a big $2,000 home study course and release it later in the year. But because I believed the crash could be coming sooner than later, I taught this privately for my students on a webinar so they could get the information now instead of having to wait for me to produce a big product. So when you enroll today, I'm going to give you free access to the recording of this exclusive training event where I personally teach my protect and profit strategy. Coupled with everything you're going to learn about straddles and strangles, you'll feel unstoppable going after profit potential in the markets. And I can't wait to teach you this strategy. And by the way, I'm only giving away access to my protect and profit strategy if you enroll in my Options Profit Mastery program today. This is not available anywhere else, so this is the only way to get access to this important training. So let's recap what you're going to get today. There's the full year's unlimited access to the Options Profit Mastery Trade Candidate software for straddles and strangles, the companion training modules and trading blueprint, the basic options fundamentals training modules, and a year of unlimited email support. Plus, you get immediate access to the private Protect and Profit training I did for my best students, which has a real value of $2,000. If you add everything up, that's a total value of $7,500. Your investment, though, is just 2 payments of $297 each. That's 92% off the full value of everything you're going to get your hands on today when you enroll. I've got this at a point where everybody can afford it. So if you're already trading options or if you've been thinking about trading options, believe me, you'll be amazed at how much profit potential you'll be able to go after using just straddles and strangles. And I think you'll also be surprised to see how much less stress there is when you trade the way I teach you. Now, I do want to give you a quick warning here. Only 500 copies of this program will be sold initially. If you've been following my training for any length of time, you know that this rule is nothing new. Every time I come out with a training program, I limit the number of copies that I initially release. The main reason is that student support is my number one priority. So when you become my student, I want to make sure that you're taken care of. I want to make sure your questions are answered quickly by my professional support staff. I just think that's the right thing to do. And even though I could probably sell 5,000 copies of this program right out of the gate, I don't think I could support that many new students all at once. So when you enroll today as one of my charter students, you're joining a very select group of serious, like-minded traders who are looking for an edge over everybody else. Now, here's what you need to do next. If you want to discover how to go after double and triple digit returns in the safest markets trading straddles and strangles, what I want you to do is click the Add to Cart button right now. Just click on it and you'll get instant access to the software and all the training. You don't have to wait for anything to get shipped to you because everything is delivered automatically online. You could be getting the latest trade candidates and watching the training in just a few seconds from now. And you really don't even need to say yes right now. Just say maybe and take the Options Profit Mastery Straddles and Strangles for a 60-day trial. Your satisfaction is 100% guaranteed. If you don't think this is the fastest and easiest way to have the potential to make more money more safely and more quickly trading options, or if for any reason you're not 100% delighted with it, just prove to us that you gave it a fair shot within 60 days and you'll get a full refund. You don't have to trade every week and it doesn't have to be a live account. We also don't care if you made money or lost money. We just want to see that you gave it a shot. Now, if you already have one of my other training programs, the Options Profit Mastery Straddles and Strangles software and training was designed to complement my other strategies. So you can feel good about adding it to your trading toolkit. Remember, there's not just one right way to trade the markets. And the more methods you have, the more ways you have to spot profit potential. It's kind of like golf. While you could certainly play 18 holes of golf with just a putter, you'd certainly do much better playing with a full set of clubs. So here's kind of a final word of warning if you're sitting on the fence about this. I want you to stop fooling yourself. You can't keep doing the same thing and expect different results. It sounds trite, but it's true. If you've been trying to make money trading, but it hasn't worked, or you feel like you're missing out on a lot of profit potential, or if you just feel like trading is eating up all your time, I'm going to suggest now that you try something different. It may seem obvious, but I can't tell you how many times people go out there, try a bunch of different trading methods, they don't make money, and they just keep trying the same stuff, or they give up completely. Don't give up completely. I know you want to succeed at trading. Giving up is not an option. Doing the same thing over and over again when it isn't working is just silly. Don't do either of those things. Try something new. I want to let you know that consistently making money in the markets is hard without a good method that tells you exactly what to do and that removes all the guesswork. Anybody can go out there and gamble in the markets and maybe win a few trades here and there, but in the long run, gamblers get their accounts wiped out again and again. To build a real, sustainable trading plan and actually achieve a consistent edge over time, if you don't have at least one good method that fits your life's schedule, I can tell you that it's probably not going to happen. Trust me, you're never going to achieve a consistent edge in the markets until you learn to trade with at least one good method that gives you confidence to make decisions, no matter what happens in the markets. Or maybe you already have a method that's working for you. If so, great, keep using it. But I don't think you'd be watching this training today if you didn't feel like something was missing. So your option is to either develop your own trading method or just get started today with the one that took me months to develop and just plug it into your own trading plan. Remember this, Options Profit Mastery Straddles and Strangles software and training gives you a huge edge over 90% of other traders. And I believe it's also the perfect add-on method to however you're currently trading because it requires so little of your time once you get going. And just in case you're worried about it, this program is 100% guaranteed to work for you. It comes with my 60-day money-back guarantee, which is more than enough time for you to consume the material, implement it, and see the results. It's not a question of will it give you an edge, save you time, and shield your account from risk. Yes, it'll do all that. However, if you're worried about it, or if you're concerned that maybe it's not going to be a good fit for you, don't be worried. Go ahead, invest in the program, and try it out. If it doesn't work for you, let me know and I'll give you all your money back. There's no risk to you whatsoever. Again, the final reminder is that only 500 copies will be sold initially. That's it. I limit enrollment for all of my products. If you've been my reader for any length of time, you know that I bring training products out and then I take them off the market until I'm confident my new students are taken care of before I let more people in. It's just that simple. So what you need to do next is click on the Add to Cart button below right now. Go through the enrollment process and you'll get immediate access to everything. I look forward to seeing you in the members area, and I look forward to hearing your success stories after placing some trades yourself. This is Bill Paulus wishing you good trading.